Hey guys, what's going on? It's Jesse here again. Today we are going to go over a common strategy almost every trader uses either intentionally or at least passively to find out where price is going and where price could reject. Um, and so many people call it many different things. Some call it, um, support and resistance. Some people call it supply and demand. Um, Some people will call it, fighting zone. I've heard that called before. I think it's a little funny to be said, but a lot of people will call it many different things. Mainly, you'll hear support and resistance, supply and demand. I've heard fighting zone a few times, but um, not usually commonly said. But they all generally mean the same thing. So, the easiest way to explain what supply and demand is, support and resistance, any zone that's fought over, is to explain it like this. So, say up in this zone, we have 100 orders coming in. We have 60 sellers, 40 buyers up in this zone. Okay? We'll say right at this level right here is where those orders are going. So we have 100 sitting orders. When price comes up to this, I'm back testing here so you can see how price reacts. So I have 100 orders that came through at this 469, 470 level. And so in order for price to move, we have to have a buyer and a seller. For price to move up, we have to have more buyers than there are sellers. For price to move down, we have to have more sellers than buyers. So when price came up here, we had 60 people that said, okay, at this spot, I am willing to sell 60 shares of the S&P 500 that I own at the price of 470.48. And we had 40 buyers come in. They said, okay, I'm willing to buy your shares at 47.48, but I only have 40 people who are willing to buy. So what happens? So price comes up here, boop, 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 rejects. And so now sellers have more control. We have more sellers in the market right at that point than we do buyers. So what happens? Well, sellers now gain control. And so at this point right here, we'll call it 462. Sellers push price down, buyers are taken out, sellers continue to move price down. At this level, we have another 100 orders coming in. Another 100 orders. But this time, we have 70 buyers and only 30 sellers. So price comes down here at this point. We have 70 people who are saying, okay, I am willing to buy as many shares, well, 70 shares of the S&P 500, but the most I'm willing to spend is 462.15. And so I have 30 sellers who are like, okay, here's my share of the S&P that SPY at 462.15. Well, there's 40 people who don't have their orders filled. And so now price comes there and those buyers are like, okay, I'll sit here. And so now instead of having 70 buyers and 30 sellers, we had 30 people who bought and 30 people who sold, so they're out of the market. So now we have 40 buyers at this level, right? This part doesn't matter anymore. We have 40 orders, 40 buyers. At this level, we had 40 buyers take out 40 sellers. So now we have 20 sellers at this level, right? So now we have more buyers than we do sellers. And remember, we still have these sellers right at this level, right? 20 sellers. And I'll see if I can get rid of that right there. So we have 20 sellers here. We still have 40 buyers at this level. 40 buyers. And so from this point on, those orders are still there. I still have 20 people who want to sell their shares at 47.48. I still have 40 people who want to buy shares at 46.25 or 46 462.15, sorry. So what happens? So now price bumps up here, but now we have 100 more orders coming in. Same thing, 100 orders. Say 60 buyers, 60 sellers, 40 buyers. So what's that mean? Well, 40 people take them out, but now we still have 20 sellers left over. So now, what's that mean? Now we have a combined 40 sellers at this level. So we'll delete this little bubble. Now that jumped up to 40. 40 sellers. So we have 40 resting orders at this level. Price broke out, filled those orders, and now I would say we would have those same sellers at this level up here. But for simplicity's sake, we'll keep it here. And so price rejects that level, right? Supply, demand. There is not enough demand to push price above this level, and so it gets rejected. We go back down. And why do we go back down? This is a key part that really flipped the light switch for me, is because we're not going down necessarily because that's just how things have to go. We're going down to look for where more buyers are going to be at. So we come back to this level. Before, if I'm being patient, say I'm going to buy some shares of the S&P 500 for my retirement account. Just going to add some shares to that, diversify a little bit through, whatever. I just want to buy some shares. Well, if I'm looking at the chart and price is up here battling, I don't really want to buy up here. I want to get as good of an entry as I can get. I want to get a good value for my investment. So I'm going to look and see like, okay, so when price came back here, buyers really stepped in. So I want to put my buy limit order, which means that's the highest I want to pay is at this level. So then we have sitting position right here, say 50 buyers just waiting, right? So I have 50 buyers plus the 40 I already had, but these 50 just put in their order while we were up in this area. They put in their order while we were up there, and they just want to get a good value for their investment. So they put in a limit order there. And so now we have 90 buyers sitting here at this level. And this is the psychology of the market. So anybody can look at this chart and be like, okay, price rejected here, here's a line. Price rejected here, here's a line. Price rejected here, and so on and so forth. But when you really understand why price is moving, that's when you'll have an edge on the market and you'll be able to start predicting things. And so back to my point, we have 90 buyers sitting here. So when price needs to move up and come back to find more buyers, we have buyers who are sitting here at this level, back at this low here, right in this area, because price came and rejected that area right there. So we have some buyers here. While price was down here, we have people who are trying to get out of their position. We have more sellers up here. Sealers. We have more sellers up here. And so this is how price moves. This is the gross anatomy of why price moves. It's just who has more control of the market at that point. Where do people want to get in at a good value, and why? And so what we'll find is, if I fast forward a little bit, we still had 90 resting orders here, right? So price rejected this point, and at this point, all my buyers are sitting over at this level still. People will still be sitting here. They'll just wait to get filled until, forever. They'll just keep waiting to get filled. But I have 90 buyers here. Well, when price moved down here, I only had 60 people for this is all just an example. I had 50 people who were willing to buy or were willing to sell their shares at this price. And so because of that, we'll say that those 50 buyers are out. Price came up here, and then the next candle will show us what happens. Price breaks and rejects. So where's price going to go? down here to this value zone, right back up. We found buyers here. Okay. We now have more buyers in the market. So that's why we have green candles. Buyers are in control. And then we're going to fight over this level yet again before we break out. So at this point, my buyers have met every single seller that there is. So let's say my 40 buyers are all that's left in the market. Well, when those 40 buyers are willing to sell their shares, I'm going to have people up here willing to sell. So there you go. There's probably a point there. Right about here is where all those buyers were like, okay, I'm out. So now there's more selling pressure up here. And you can see how this can easily turn into a cycle. Now our sellers are here. But don't forget, people are going to look at this level, be like, okay, this was a significant level before. I'm willing to buy here. They'll do the same thing here. Same thing, here. Anywhere where price accumulates. Okay, right there at that line. Okay, I'm willing to buy there. All the way at the bottom, remember, we still had people waiting here. Willing to buy there. So price goes down, touches. What happens here? Price touches here. My buyers are like, okay, yeah, I told you I'd be willing to buy there. They bought, price is moving back up. Now people are saying, okay, I'm willing to sell right here. So on and so forth. And this is the psychology of the market. Why supply and demand is important. Because everybody's going to be looking at the same chart at the same time. People who are trying to get a value on their investment are going to be saying, okay, I want to buy low and sell high. That's the whole point of the market. I want to make money. I don't like to donate any money to anybody, in the market. And so I'm willing to buy at a value and sell at a premium. And so my resting order is going to be down here, and my sell order to get out of my position is going to be up here. And so that's just the psychology of the market, why price is moving where it is. And so through these supply and demand zones, let me read my drawings, I can look back super quick and say, okay, here's where price was fought over, here's where price was fought over, here's where price was fought over. And you could do this on any time frame. I'm on the daily chart. I can see these points. Okay, we came back to this value right here 3 separate times. Fought over here, fought over here. Here's another spot. And you can do this as many lines as you want. The biggest piece to this whole idea of support and resistance, supply and demand, whatever you want to call it, is that you can never marry your supply and demand zones, just like you can't ever quote unquote marry your trend lines. Everything's subjective. While you might have your supply and demand zone right here, I'm going to have mine right above yours. So, I'm having orders above yours, you're having orders below mine. I might get filled, and my orders are enough to push the market up again. I had enough buying orders that the market's like, okay, I'm out of gas from selling so many orders. I need to go back up. And so what's going to happen is they're going to fill all my orders and leave yours behind. And so that's the whole concept of never marrying your support and resistance or your trend lines or anything like that. Everything here is subjective. The whole market is subjective. Everybody's going to see something through their own lens of their own eye. And so because of that, that's what gives each trader an edge. You're going to see something similar to me. I'm going to see some things a little differently than you. But overall, this supply and demand, strategy or foundation is just based on market psychology. And once you really understand, back to my earlier point, once you understand why price is moving and where it needs to go, that's when you're really going to have an edge on the market. And so, you can do this, like I said, on any time frame. I can go back to a 15-minute time frame. As you can see, those daily lines that I drew are respected even now in the end of April. Here's a rejection here and here. right there, perfect rejections. And we didn't even look this far ahead. Perfect rejection of that line. Price never has to repeat itself, but it has a tendency to do so. Rejections here, rejections in this zone, way up here, right? And we drew those lines. I don't even remember when. I think it was like, oops, I think it was end of December, right? Because it didn't jump over 470. Yeah, so up here, and those lines are being respected 4 months later. So once you really grasp why price is moving, where price needs to go next. So, for example, price closed today at 427.71. Do we have enough buyers to push price up to this level where people were willing to sell before at 435? Maybe. And if not, where does it need to go? Well, it needs to go down here to 415 to 50 to pick up more buyers. Jump on the buying train, and hopefully we can outnumber the sellers and push price back up. That's the gist of the psychology there. Hope this helped. If you have any questions, shoot them down in the comments. And yeah, have a good one, guys.